It's the weekly 30/30 trading list. We're finding the best momentum companies on the ASX and then identifying the companies that are set to run. The man guiding us through who's filtered the charts is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
So always looking forward to these ones, especially when the market's had a little bit of a pullback. The list seems to service sort of better quality companies occasionally. And when you've looked through the quarterly momentum companies, have there been many that have popped out to you this week?
Yeah, I reckon the quarterly looks like normally there's a lot of stuff in the weekly. And that's kind of, more catching my eye as in terms of what the early movers are. But I reckon there's a bit more going on in the quarterly here than the daily. I think some of the daily sort of stuff's maybe some of the movers in there are a bit small this month, but definitely some of the quarterly movers are pretty decent. And there's just some big moves and big volumes here. So when I see big volume in the marketplace, that's what sort of catches my eye. So that sort of puts stocks on my radar, So when I see that, so I think number 2 on the quarterly was Strike Energy. I think we had this last week, Chris, as well. We did comment on that large volume, the pullback and the large volume there. So bit of a tricky one here, because obviously, look, the only thing on the chart is we have sort of broken above this little swing high there. So that was our first little positive. Maybe coming back to the 50 there was, but seeing that big volume there, I know there was a bit of sort of corporate action there. I think these guys were part of a deal, and then something else, with Beach there got sort of, was a bit of corporate activity in this deal, but you could see the volume was pretty large. That's pretty substantial there, and that's when you do get legs off stuff here. So has moved sort of since then. So that was the sort of one that I sort of saw there. I don't know if I'd be chasing that here. I'll be waiting for a consolidation there, but when you see big volumes and stuff there after break, and then again, I think this Alpha as well. We had this one on the list there a while back too, Chris. So we had this talk about this consolidation there probably last time we're on, and then we've just popped straight out of there. So when you see this little, high type flag or pennant flag formation there, just remember sort of like you can get nice moves out of these, but I always sort of temper my, some people say you should run by the same amount as you come in, but I don't know about that. I always figure this is like a fourth wave a lot of the time, and then your fifth wave move. So I always think this is going to be a shorter move than the previous move, but you just never know there sometimes. But you can always get a decent move off once they break out of here. The good thing is this is normally like a 3 or 4 day. So not that I don't sort of suggest trading for, I normally trade for longer than that, trying sort of get multi-week positions there. But a lot of short-term traders would be looking for like a 3 or 4 day move off like this. I would just trade this. If I saw this might be a 3 or 4 day move. That might be it. That might be enough just to take your 20-30% move on. It's probably a bit more in that case. But so those little high type flags or little pennant flags stuff off, are definitely worth sort of watching there. But I wouldn't be trading them for long terms. I'd just be trading them for the sort of short terms, 3 or 4 day move and stuff there. Number 4 on the list was Invictus Energy. Just put this on my radar here, Chris, just because it had the history of this stock is it does pop and then drop. So, a lot of pops and drops in here, a lot of, pops and drops. So, but has sort of popped there, come back, and then a little mini pop again, another consolidation. So maybe this will do some sort of consolidation here. It's probably not going to do a VCP, but definitely one I'd keep an eye on, just in case here, just because it's obviously interesting sector. Satire is, it's sort of interesting here. It's been one of the leading stocks actually. So this is sort of one that came up in the launch pad quite a while ago there. Sort of did sort of lead early. While the rest of the market was sort of finding lows, sort of June and October. This was making higher lows in October. So pretty firm here. Only thing here is that we have had a nice pullback, come back and rested on the 50, and so far we're bouncing off the 50 there. So that's the sort of, oftentimes you'll see a lot of stocks come back, and it doesn't work for every stock, but I do like the 50 there. I think, sort of like a lot of stocks will come back and find support there and go again. So Satire doesn't look too bad here. It's had a pretty good move here, but I mean, this my feeling here is this might just go back up in the range here, maybe consolidate a bit more. So but it doesn't look too bad there. CIA again, just having this little pop, having a little run there. We sort of saw that was pretty good volume when it did break out there. And then we had a little consolidation, and then, you know, once it popped again as well. So don't think of this move as going, the next move is going to go exactly the same sort of size. I always think this is going to go a little shorter. So, you know,
75 or 80% or something like that.
Yeah, something like that. So just, you know, yeah, I'm probably more, you know, what have we gone here? 1, 2, 3, 4, you know, look, to me, I probably would have, you know, I would have taken probably profits after day 4. I probably wouldn't have been pushing it, but saying that, look at all that volume through there. It was pretty robust as well. So it might have actually, you know, this is why sometimes you let the, you know, the market tell you whether you should be getting out your normal or whether you should hang on a bit longer, because, you know, that's been pretty robust volume all the way through there. So been really sort of no signs of sort of selling going on there currently. So robust in that regard. WBT there. I just thought this was a little just a little exhaustive there. I just noticed that was a big volume. Sometimes you can run, and then that last little spike in volume can be a bit of an exhaustion there. And I think it's just sort of had a few moves in the past there where it's sort of run exhausted, you know, into the top there. Just some the bigger volume days. See how the bigger volume, you know, yeah, it just sends a. Sometimes you just got to watch those volume, because you can run, and then all of a sudden you see the big spike at the end. It's like, you know, that's just the sort of smart money getting out. Yeah, and that's often when they sort of can sort of and change trend as well. So just be wary of that one. That's sort of one that I thought looked exhaustive to me. VUK Virgin Money as well, so sort of something similar as well. This has had a pretty nice run here. Always sort of, you know, Elliott waves sort of always suggesting, looking for these sort of 5 waves, and, you know, particularly extensions in there. You can just see a lot of drives, you know. If that was your sort of low there, 1, 2, 3, 4, 5, 6, 7, 8, 9 drives there. That's pretty, you know, it's getting pretty extended. I know the volume's been pretty decent in there, but yeah, I did sort of that day there, which I just sort of saw yesterday. That was, you know, hit a bit of a peak there. That was the first sign of selling. So that's probably the first negative day was seen there. So just when you see that little reversal up there after a little extended, that would have had me a little concerned. I would have, you know, if I was long that stock, I would have probably cut it in half at least, and then tightened my stop underneath the low of the day or something like that. So, but yeah, just things to look out there. CMM. There's one again. This has had a pretty good run there. Capricorn Metals, I think it's been on the radar. It's come up a few times there. Probably just looking a bit long there, but volume's been pretty light all the way through there. So RMS, this is one that sort of hurts me, man, because I sort of, as much as I've been long a few golds here the last month, this is the one that went to a false break here, which would have been a, you know, beautiful trigger. You know, 60 cents here. What are we up to? 90, almost $1. Oof. You know, getting a 50% move plus would have been would look nice on the portfolio. Yeah, good for the P&L. So not that I'm complaining about my P&L this year, but so, you know, closer to my goal would be nicer. So yeah, but yeah, no, Fisher Paykel's had a nice move. It's pretty good volume there. Having a bit of breather. That probably volume that came in there yesterday. That's probably what you don't want to see. So.
Don't want to see it because it's off the highs and a gap down, is it?
Yeah, you prefer to sort of see, you know, just look through that little breather there.
Low volume type closes.
Yeah, so you've had nice volume through there, and then just no selling going on there. So this has had a good volume there. We just started to dry up a little bit at the top there. That was okay having a low volume, but then first day down, big volume there. It's like, well, okay. So sort of probably gonna maybe go through a consolidation there. It's just, you know, if we were in a market that was sort of having VCP breakouts everywhere, then you might probably hang on here. But this market is not, you know, things are breaking out and then coming straight back. So a lot of the moves are a lot shorter. They're not, you know, they're just not moving as big as they normally are. So it's not really like a full on, you know, bull market here. If anything, we've still got a few sort of bear market characteristics, which is oftentimes, you know, when you're in that basing phase, markets can be a little hesitant. It can be, you know, 2 steps forward, 1 step back. So it definitely feels like that type of market there where you're just when your stocks are sort of, they congest and they break out and they go for a bit, and you think, oh, this looks great, and then they'll fade for a couple of days, and I'll just give up the release on no volume for a few days and come back, and then they'll bounce again, and then here we go, and then they'll fade again. So you're just sort of not seeing the classic follow-throughs that you would normally see in a really robust market. Sort of more, this is sort of, you got to really sort of pick your stocks here. So thought this was a good one. Now again, I think this was on the radar there a few weeks back, ADT. We can see here that, again, we've had a pretty strong rally there. So it's okay to have these, don't be worried about stocks having strong rallies. Sometimes, I used to be sort of one person who, if I saw the stock up here so high and go, oh, I've missed it, it's too late. Just watch these stronger stocks here. Watch them to see if they have a pause, because sometimes they can just go through. And what you want to see no volume. Yeah, you want to see like a little congestion pattern here, no volume going through, and then you'll just sort of see them, all of a sudden they'll show their hand late here, a bit of, we saw a little bit of volume there, and then it pumped through. And so, maybe you get a 1, 2, 3. If you're lucky enough to get a third day there, just tighten up here. Me personally, if I saw something after these long moves like this, once they break up here, I'd be using each day as my, just say that was my, say I bought that day there, use it as my stop. After this day, the low would be my stop, in this day, the low would be my stop. I just wouldn't want to see swing low get broken. They should, once they break out of these congestions, they should just run for, 3 to 5 days or something like that. You don't want to see them sort of stall here. So, I mean, that day stalling would have concerned me. I would have had my stop under that low there, which would have been, 316. So I might have put my stop in at 315, 314, maybe just give myself an extra cent. But then it would have just stopped me out there. So still make a gain there, not massive, but it's all about managing the risk here in these markets, because you really have to manage your risk pretty tightly currently. So many things sort of chopping back and forth here. I thought this was an interesting chart here, Chris, the Mount Gibson, just because I think we sort of got mentioned there, a few of these iron ore stocks there had a bit of a change of character there sort of about a month ago, and they sort of had a nice, because this has been trending down all the way down here, stay below the 50-day, eventually breaks above the 50, breaks above a swing high. So that's a change of character. And then so had a nice move here, then we've just congested back here. So didn't give us a
too.
Yeah, so it didn't give us a VTP or anything like that. Doesn't give us but when they do sort of break a swing high, that's our first sign of positivity. And then we get a nice move here, and then, they might sort of consolidate back here. The two things I look at there is I look at the time that it takes to go up here. So this would be, what's this, 1, 2, 3, 4, 5, 6, 7, 8, 9 days up. Let's say inside day of the 10th, and then we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days here. So 10 days up, 10 days, we basically only come back half the range. So it just tells you, something McLaren used to talk about. Sometimes the market's it's just simple as counting days up and down, as to sort of see how robust the market is. So we can see here that the stocks come back only half the amount in the same amount of time, and there's no selling in there. So that's a sign of strength there. So, and you've already got to change your character breaking a swing high. So, so there's just a couple of lessons there to look at there. SM1, I thought was pretty interesting here. Just because this stock, Synlait Milk is obviously, some of those milk stocks have been, A2 Milk's been pretty robust there. Bob had a bit of a pop, but now it's sort of, fallen away quite considerably. But Synlait's had a pretty decent move. There's some pretty big volume through there. So that's just very different for that sort of stock here. So again, probably just watch this one. So it is a pretty choppy stock, so it's hard to trade that one. You'd want to sort of see something half decent there. So you look at Bubs, that's after all that US sort of stuff there, it's all sort of faded there. This is classic, bloody big announcements getting into the US market, Biden talking about the company, and then the share price goes crazy. And then ever since then, that's selling into the good news, so it's just sort of faded since then. So, this is probably getting oversold here, but nothing to do there yet until see something real positive. Only other one I saw there was Fortescue, as pretty interesting here. This sort of had a pretty decent move. Volumes are okay. If you look at our weekly chart there, we can see that we've sort of broken out of this sort of downward channel here, Chris, which you might sort of say is positive there. I'm just a little hesitant commodities because the normal cycle has them turning down. And the other thing I've noticed too is that I've noticed that like a lot of the majors, so the major stocks, so resources and banks over the years, if they're in a sort of like a bearish phase, they'll often go high to high 180 days or 6 months, so like a half-year cycle. And so I've noticed that the last sort of main swing high there on our weekly was around the 9th of June. So if we fast forward 180 days, sort of 6 months ahead, we're right on that window here right now. So it's the same for BHP and Rio as well. I think Rio was on the list as well, BHP. So again, this is our major high here, BHP, 8th of June here. And then what with the 5th here, I think was bang on 180 days. We've so just got a classic sort of, I saw this with banks, through the GFC and stuff there. They, came off pretty hard, came back, either a quarter year or a half year into a high, and then they started again. So, I'm just seeing signs of what we call distribution signs for some of those major resources. So I know everyone's pretty bullish commodities here because there was inflation there, but we started to see the oil stocks break down here. The oil price is moving lower here, so they'll be careful of those resources here. I just think we're at a really key level here for all those sort of Rio, BHP, and Fortescue. So it'll need to push above this high here. If they start turning down here, that's turning down from a really important timing point. So sort of the next week's pretty critical for the big miners here. The thing I worry about there, Chris, is that if we look at our cycles that we've covered on Tuesdays and stuff there, 60-year cycles pretty much all calling for a top in the first week of December. So we've all sort of run up in here. So now we're going to go through either a sideways consolidation, I think, or we might have a little decline there. The 60-year cycle went sort of sideways, and then I think the 20-year cycle went down. So just got to be a little cautious at the moment. Okay, so if we look at the launchpad, so look at the stocks that are making a move. So Synlab was number 4 there. Obviously, that's the big volume there, the big move there. I think Dub was actually on the list as well, which is sort of interesting. So that stock was in the doldrums there, a bit like MP1, and it has had a bit of a pop here sort of late. So I think MP1 popped here as well late, but then they faded again. Again, it's just classic sort of, it's the wrong sector here with inflation high, tech sort of under the pump. So that's what I mean. You've got to be careful not to be, it's okay to trade these here, just don't trade them too big. And then you just got to manage your stop. You've got to manage your stops really, that's one thing I've noticed here myself is I've really been watching those stops. I got a bit upset a couple of days ago. I think 2 days ago we had a bit of a down day. I sort of got stopped out on 2 positions. But I got stopped out, I'd sort of carved them back a little bit because I was worried market, and then I tightened my stops up, then I got hit out of a couple of them, and then it's always that short-term disappointment, I got stopped out. But then I look at my capital and go, geez, I've only lost like 0.5 of my capital, and now I'm sitting in 2/3 cash, and I'm like, oh, geez, I'm ready to go. So I just need to wait for good trades here. So, if you don't, you get disappointed when you get stopped out. But the thing is, you have preserved 99.5% of your capital, which is fantastic because then you've only lost a tiny bit. So I think my loss for the day was pretty tiny after I looked at it and thought, oh, I've only lost this and this. So that's not too bad. Now I'm sitting in cash. I've preserved my capital and just leaves me so well placed for, like if this market just keeps pulling back here and we don't get any long signals, then that's fine. I mean, you've seen, Mark Minervini and David Ryan, all these guys who are the best traders on the planet, they often sit out of the market when the market's going through a bearish phase. So you need to have sitting power. And that's something I have only just learned in the last sort of probably 18 months. And it's definitely had a major positive effect on my returns, being able to sort of sit out and not trade or minimize or trade smaller. Yeah, I really think, you know, if you can build some sort of rule into your trading, Chris, and everyone out there, that basically says when the market's giving you green lights, like everything's on. So say the, you know, index are trading above the 50-day, they're all trending up, everything, you know, sectors on fire. Then you got to put your foot down and trade aggressively and with size. But when the market's going through maybe a bearish phase or some negativity, or the sector's under the pump, if you're getting negative signs, then you've got to have a rule in there that sort of stops you from going as hard. Do you know what I mean? So there's, now you should almost have like a, you know, double green light, double red light, and maybe a single green light and an amber. Do you know what I mean? So just so you've sort of got, you know, what sort of market you're in, because you sort of, if you can categorize how strong your market is and how weak it is, and then trade accordingly, that'll just save you heaps of dollars there, because that'll get you out. Like I went to, you know, pretty much a third cash, because the first week of December was always going to be my peak. So I knew I had to cash in, bank a lot of chips, and then I tightened up another third, and then I just stayed in with the third stuff there. And I did put one short on as well, just as a tiny hedge on sort of something completely different, you know. But you sort of, yeah, just got to have that mechanism there to sort of to know. I think the best traders they know when they can go, and then they know when they should be betting a lot smaller as well. If you can try and build that into some of your rules, I think that'll definitely help you.
I think that fits in with a lot of those reports where you read and hear about the best traders, and they'll say, if it wasn't for my 5 best trades or 8 trades for the year, I would have been break even. But those 5 ones, which is a bit like those double green lights you're talking about, where they really put the shoulder in, they make the big differences to the P&Ls. So you're saying it's the importance of knowing when your setups are on fire and when the market's right for you. Is that kind of what you're getting down to?
Yeah, I think it's with experience too. So if you sort of know you've been running, so you know your portfolio is killing it. And we've just had a period there where we've smashed it out from the October lows. So got a great return there. Model portfolio, my portfolio is doing, you know, even better. Been some great opportunities, some great, you know, the P&Ls move really nicely. But then you're sort of getting, you know, you can see the market getting pretty vertical, getting extended. That's the psyche's got to sort of start to cash in a little bit and start to de-risk. So I think if you can build, you know, as human beings, you know, people, unfortunately, human beings are sort of, you know, got a lot of bad habits, and so you almost sort of have to sort of create rules for yourself to, you know, to make you apply some good habits, if that makes sense. So just make it easy for yourself, you know, sort of if the index breaks below this level or 50 or you think the market's getting too extended here, you've got to sort of, you know, I think you've got to create some rules in there just to sort of, you know, de-risk you a little bit, you know. I mean, I pretty much trimmed I trimmed like a third of my portfolio in a day, just because I thought, you know, we're getting long in the tooth here. I just wanted to de-risk. Had a pretty good phase in the market. You just have to be able to do that. And then, in hindsight, you know, a few days later, I was wishing I'd cut 2/3, but I did cut a third. I tightened everything else up, and you know, and I'm totally comfortable. Like I'm literally sitting less than a third in the market. I've got a couple of longs, the longs I like. Got a short position I like as well. And I'm sitting here ready to go, and I've preserved 99.5% of my capital. I'm like, okay, that's good. That's what you want to be able to do. It's sort of, as I say, it's taken me a long time to get to that point to be able to do that. But I think if you can build some mechanism in, some rules into your trading that sort of help you do that, then I think that will sort of help you as well. Just recognize when you're sort of in a, you know, a green light or a red light or an amber light type of environment. You know, just recognize where you're at. But yeah, because I know if people listen to follow Minervini and Caruso and all these other guys, you know, all the best traders in the States, they've been saying for a while it's a tough environment there. Things are breaking out, not following through. So it's just as tough in the States. If anything, here we're actually probably having better moves here in Australia. We're actually getting some decent moves in some of our stocks. So, but still a reasonable tough environment. So you just have to recognize that. And just alter yourself a little bit there. I digress. Looking at number 5 on the weekly, Sims Metal was sort of one that we looked at there. Did have a little VCP in here, Chris, and then a little breakout. The volume was pretty steady, broken above our 50, so it's sort of pretty positive. I like it on the weekly as well. A nice sort of washout low here, so not too bad so far. It's probably going to be maybe a bit of a slow mover, but yeah, I don't mind sort of Sims. Looks quite good. I think S32 was on there, but I just wasn't as, just sort of thought this might flash up to a new high and that might be it. It's just, I didn't like the weekly sort of setup there. So probably not as strong. REG, so obviously been, this is sort of one that's pretty interesting here. This is Regis Healthcare. Definitely got a VCP in here, Chris, a little tightening up in here.
Yeah.
Just not really the normal sort of stock that you get a big move on. It's also Regis Healthcare is sort of aged care, but yeah, definitely some just a few volume days in there as well. Very interesting. So definitely starting to move up here. Not real great volume through here, so we didn't really sort of we saw some really strong volume through there, and then we had a bit of a pause. We might be more excited. That day there, which was sort of the rejection, came in on reasonable volume too, so that's also maybe it's here or there. I know it can be a sign of people getting in, trying to drive it up, and then it cools off again and goes again. But yeah, this is definitely one to keep an eye on here next few days, because it is a VCP there, but just it's not the red hot VCP that I'd like to sort of see. Silver Lake, we saw a great VCP there previously. Good says there's that good volume down at the low. Volume dries up. Volume gets active again here down, down at the lows again. Has a nice drive. Then the volume dries up again here. Volume comes in, dries up on the pullback, and then volume comes in again. So that's looking pretty good. So that's what, that's the sort of thing we want to sort of see. Want to see this little good volume on the run up, dry back, low volume, good volume again. Yeah, try up again. So sometimes it takes a little while here to build up. I know a few of our viewers have actually sent through some requests and sent me some emails, and so it's great. Everyone's looking for their VCPs. Just it's a bit like learning Elliott wave straight up. All of a sudden you see the waves and waves, and then you start seeing too much, and you don't. Sometimes you got to allow it a bit more time. There's that sort of. I know when I first learned Elliott wave, I was sort of measuring every wave, and you're just seeing so much before it really unfolded. So can be the same here with learning VCPs as well. You sort of just let market unfold here, So you have to be patient. They have to let the whole thing sort of wind out here. You can start to see some of the VCPs sent through. So I think a couple of viewers sent me a couple of charts, and I agree. Like there were some VCPs in there, but I think the ones sort of sent through, they looked a little young. So it looked like they need a bit more time to sort of play out, but it is good that a few of the viewers are actually looking at it, which is great. RSG is probably one I wouldn't normally look at just because it's pretty small here, but Resolute Mining is in that sort of gold sector, which is pretty active at the moment. Some decent volume off this low here. It's probably a little small for me, but just sort of came back consolidated. Might be worth looking at. Probably not the best signal there. CUV, this stock's really impressed me, Chris. This is sort of, I think, Polynovo and CUV, Clinuvel, they were probably the two stocks that led off the June low. So if I look at all the stocks, at that stage we're looking for stocks that were sort of market leaders, and then in October they really started showing some strength there as the market was finding lows there. So these sort of stocks have sort of led this sort of. I think they've led this bull market here so far. And then look, this thing's holding up here so firm here. Yeah, I'm actually sort of thinking, I'm hoping this stock will do something like, if you remember sort of after running pretty hot into 19, had a bit of a pullback here, and then it consolidated, nice little tightening consolidation. And then, then did VCP in here, tightened right up, and then popped out of here, and then had a big move, a little high tight flag, and another big move here as well. So I'm hoping this might do something like this, sort of consolidated in here. this has sort of definitely led the market out. It's definitely a sector which has been moving in the States as well. So I think the healthcare and biotech have been held back by COVID considerably. It's just been delayed, really held back. So I just think there can be good years ahead for them. This is one that showed relative strength here. I think it might just meander back in here, do something like this a bit longer. So maybe, come February there, maybe, might be sort of hovering around, if you can just sort of hover with, under the high here between 21 and maybe 17, just sort of do this little tightening formation like that. Could be one to keep an eye on. So this is one stock that I'm sort of hoping will be looking pretty good, January, February. I just think it might tighten up here. But I've just been impressed by how strong this stock has been in this phase here. It's been relatively robust there. And it's the same with that Polynovo as well. P&V has been pretty robust. So look how strong that was. It really took off there. Had a big pullback, but it's gone straight back up to the high here. This probably will come back and maybe it'll go through congestion there as well. But there's stocks that there's stocks that I'm going to be looking out for here over the next month or two, just sort of stocks that they'll still probably pull back here and grind lower, but stocks that sort of show a bit of relative strength there when the market's sort of, hopefully finding the next low. Number 18 on the daily there. Pretty cool name here, Black Cat Syndicate. BC8. What was the other one? I think there's another one there called Heart's Head Resources, HHR. That's a pretty cool name as well, which has got my eye. So again, probably too small for me, but I do like the fact that a bit of volume into this move here. Hasn't broken a swing high, which is probably the only negative, maybe a minor along here. But decent volume in there. Pull back here, maybe a little VCP in here at the moment. So just one I'm probably just going to keep an eye on there, just because it does look interesting. But maybe there was just a lot of small stocks in the list there, Chris, which is often the case here when we've had a good run and we're probably getting the end to a bit of a bull run. I noticed that the weekly, the launch pad, the quality of the stocks coming through sort of probably start to lighten off. You start sort of seeing some of the smaller stuff there. There still can be moves in there, but you're just not sort of seeing as many of the bigger sort of more reliable names in there.
It's almost like when I remember there have been a few times coming into the June lows, looking at your seasonality that you do and your cycles on the Tuesday report coming into those lows. We were uninspired on the weekly or the launchpad list. And then just as we were coming into the lows and it was about to turn, suddenly it was firing up all the names after having weeks of sort of not giving us much. So I don't know whether that's an indication.
Yeah, no, well, that's the way it should work. It should basically, when the market's sort of on, you're getting plenty of signals. But then, as it sort of starts to cool off, you should start to, and even, if you follow Minervini online, he talks about it all the time. So his best indication as to how heavy to trade is to how well his last few trades have been working or not. So if his trades are working and they're all on fire, they're all breaking out, kicking on, then he's all in. If the last trade or a couple of trades he's got, they failed to kick on or they've only gone lightly, then he'll change his sort of style around how the market's behaving there. So you do need to adjust there. It's just important to you really got to protect your capital. That's the ultimate. I mean, it's if you listen to any trading podcasts, trading books, or they all say the same things. It's it's risk management. If you come down to controlling that side there, and then just having the ability to actually sort of win big as well. Obviously, keeping your losses small and having big winners there, trying to stay with trades and back yourself, things like that. But it's good. But when the market's on, it's a lot easier to do that. When the market's a little trickier, you sort of managing your capital is probably more important. And I think you do need to be able to make an adjustment there. I think you need a little plan B, Chris, as well in the market. So you need to, as much as we've been sort of, I sort of talking all the time about not having a playbook which is too big, just having a few trades which you follow, and then mastering those. It's been shown quite convincingly to me that the best traders, they only trade a few setups and they master those setups, and then they just they just keep reworking those, don't they? Print off hundreds of charts of those setups, and they just really become a master of those particular setups. follow, 10, 20, 30 different setups. So, but I do think you need like an A, B, and maybe a C and D, but you don't want to be going any further than that. You only want to have a few setups, but I think you need a couple setups that are going to work in different environments, or you need as I think with Minervini, he still only trades the one setup, the VCP only, but then he just narrows his, instead of basically maybe risking sort of 5 to 7 to make 15 to 20 or 30, whatever it is. He might narrow it down. He might take VCPs in a tougher market, but he might make the stop a little narrower and then the target a little narrower. So he's only going 4 to 12 or 5 to 15 or 3 to 10 or something, something like that. So you just need to be able to sort of alter yourself a little bit to adjust to a slightly different market there.
Okay, that makes good sense, and sort of keeps you fresh in the market instead of you sort of trying to fit the market to your one model.
Yeah, no, that's right. You just need to adjust a little bit. I mean, look, I think it's about not losing money when the market's off as well, because it's like sometimes everyone can make money when it's hot, and that's great, and then when the market goes sour, that's when you see that's when the naive sort of money will follow into things at the wrong time, and then they get absolutely creamed, and they don't use no risk management. So it's usually when the market turns the other way, that's when you got to be careful there. Got to be careful. Obviously, we talked about following crowded trades. This market's typically sort of showing here. If you follow the crowd, and you're going to get burnt big time here. That's been pretty obvious here the last year or two. So just risk management, control your risk there. I mean, I think it's pretty widely. I think most people sort of have something around 0.5 to maybe 2%. I think 1% is sort of what is what a lot of traders use, sort of as a risk capital. So don't risk any more than that. So I view it as if you had 10 trades in a row wrong, what percentage of your capital would you be comfortable losing with a view that you still come back? So that's a good question, because that might be for the more aggressive trader. He might be prepared to lose 20% of his capital, and you still think he can make it back. So he might bet 2%. If he's got a small account and he's having a go aggressively. Someone more conservative might, managing more of a conservative sort of super fund might go, oh, I really only want to, I wouldn't want to be down more than 5% of my account, so I might only risk 0.5%. As a trader like myself, I'll say, okay, if I got 10 in a row wrong and I lost 10% of my capital, I can probably come back from that. I still at least been 90% of my capital. I'm good enough to come back and hopefully get the next 10 right. And if I make 3% or 4% on each of those, I'll get it back. And but I think that if you ask yourself that question, what would I, if I had 10 in a row wrong, what percentage of my capital would be the most I'd really want to be, lose? You don't want to lose so much that you give up. You know what I mean? So that destroys you mentally as well. I think you need to find out what you're comfortable with losing, 10%. So, MFD was sort of one that has popped in number 22. Big volume there. Is under a 128 takeover offer. Again, non-binding, Chris, which is the stuff that we don't like. So I was trying to remember what the last non-binding one was that we had on here, which I think it was
fell over.
I think it was Origin, wasn't it? So yeah,
there was one in between as well. Yeah.
So we know the Ramsey one was at 88. That's faded here. So this actually Origin actually is, although it came off and it's come back here and come off it actually held up okay. Then they normally don't hold up that well. What we got there, number 28 was Hartshead there, HHR. Only reason I like this, Chris, is that volume. See that massive volume through there, just all the way up through here.
Yeah.
So big heavy volume there, and that ran all the way up into the high there. All that volume sort of through here. And then we've had a bit of a pullback. Okay, volume a bit lighter. Volume sort of come back in again, but reasonably solid. And then it's, as we pull back here, pretty light volume through there. This rally's a little light, so maybe not ready yet. Pretty light all the way through here. Now starting to see volume again, and then there's volumes come up a rally here. So bit of a VCP in here, not the classic one here, but this is definitely one that I've put on my list to keep an eye on, just because when I see volume that large get active on a stock like this, this is probably too small for me, but I will watch this pretty closely because it's definitely looks pretty liquid. Definitely trading volumes are up here. But yeah, just sort of one that caught my eye on the small side there. Normally I would keep away from the small side, but I do love big volume there. CTM, Centaurus Metals, little VCP in here at the moment. Come off the high there, little tightening up in here. Volumes have been pretty steady through here, so not a bad little volume through there. Dried up on the pullback. Volumes are okay here. Had a bit of a spike up here and pulled back here on light volume. So this actually not a bad looking chart for a small one. ADN. Again, pretty small here as well. So I got a little bit of a tightening formation there, but probably not the best thing. It is sitting above the 50, but again, probably too small for me. But yeah, a bit of a mixed bag in there today. Not probably in our weekly there. We've got a lot of small ones, not too many big stocks in there, which I think just tells us maybe we're a little late in the cycle. Plenty of stocks in the quarterly there that are that still look pretty good. Having just looking for those to have a bit of a pause, a little consolidation. We've seen that most of those stocks that are in the quarterly, Chris, have been in our quarterly for the last few weeks, or they've been our launch pad the last month. Most of those stocks have been coming up, and they've all had a nice strong move, and most of them have had little consolidation phases as well. So I would suggest to the viewers out there, look at the stocks in the launch pad, the stocks that have the big moves, and look at the ones that have had the biggest volume moves, and then wait for them to have a little breather consolidation, and then look for that once they sort of consolidate. I think those are the ones that have been moving quite nicely there.
That's a good insight, especially to break down and understand the 30-30 list, how you've been trading it, and how it's been working really well for your portfolio. So it's a good way to tackle it. Is that sort of where some of your trading ideas have been coming from?
Yeah, getting a few from there, leaders. I've been trying to keep my eyes open. Maybe trying a little too hard, but yeah, I've just, like at this stage here, I think at the moment, because I feel like we've had a great run, and I think we're just about to hit a bit of a pause in the market. This is the point where it's all about managing the risk here right now, because I just don't want to, if you've had a good phase here like myself there, you don't want to give it all back. You don't want to undo all your good work and give back. Don't leave yourself to, just manage those stops here. I think, at least when you're getting close like this, two things I do is I trim, and then I tighten my stops as well. And I make sure I made sure, I look at my risk sheet. I work out, okay, how much, if everything got stopped out tomorrow at my stops, how much capital would I lose? Is that too much, or is that okay? You never really want to lose, but if you understand, if you know what your worst case scenario is, if the market got absolutely belted and you got stopped out, and for me, like during the week, I sort of got stopped out on two things, but it was like, I still retained 99.5% of my capital. It was less than 0.5% of my capital. So it was pretty good. And I've already trimmed my portfolio back. So I've got very little risk on the table. Potentially. And then I can sort of sit back here and have a clear view and clear mind and wait for some good setups.
That's a good way to take into the week. And as you mentioned on your cycles, that's the timing. So we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned his cycles, mentioned how he's trimming the portfolio and how he's running the portfolio. He covers those in his Tuesday videos on the right-hand side. And then we've also got trading strategies where he's talked about volatility, contraction patterns. He's mentioned false breaks and pennants and flags and different approaches and ways to look at the markets like he's covered in today's video. They're summarized in the right-hand side as well. And finally, to follow Gary on Twitter, his handle is there on the left-hand side.